This is Mr. Octopus, who manages an open-end mutual fund. You want in Class A, ahead shares, paying more on the front end and less over time. Let's go to Mr. Octopus's warehouse to see how we can get a discount. This scene should help you remember front-end load discounts. First thing we notice is there's 2 stacks of shelves. On each shelf, there's shares of the fund. The more you buy, the less you pay. This is similar to mutual funds, where the load drops if you buy more. So if I invest $1,000 into a fund, I might pay 5% or $50. If I invest $100,000 though, I can pay 4%. This continues all the way up to $1 million. That's where I don't pay anything to go into the fund. Mutual funds will provide a load table that details how much you pay based on how much you invest. The load table is unique to each specific fund. This is just an example. Next thing we notice is that the fund has a loyalty card. This is to remind you of rights of accumulation, or ROA for short. This usually counts 2 ways. First, let's say you're going to invest $10,000 today, but you already own $200,000 worth of shares. Does your $10,000 purchase today get charged the full load amount? Or do you get the $100,000 breakpoint level because you've already accumulated over $100,000? Well, rights of accumulation let you combine what you already own. Plus, you get to add your new purchase to determine the breakpoint. So your rights of accumulation would be $210,000 with this purchase, and you would get the $100,000 breakpoint level. You can also see that there's 2 shelves. That's to help you remember you can combine funds in the same fund company to determine your rights of accumulation. So let's say you had $50,000 in the value fund and $150,000 in the bond fund. Today you're making a new $10,000 purchase in the value fund. So you combine the $50,000 you already own in the value fund plus the $150,000 that you own in the bond fund along with today's purchase. So your total ROA would be $210,000. Now what if you had money in another fund company? So you're buying American funds, for example, but you already own some BlackRock funds. Well, ROA is for the same fund family. If you get rewards points at Costco, you can't go spend those at Sam's Club. Now, please note that there are 2 families that matter here. You've got the fund family. So American funds, all American funds that you own can be aggregated. But then there's also your household family. Often funds will allow you to aggregate with family members like spouses and minor children. The definition of a household family is specific to each fund. So at this point, you've got $210,000 worth of accumulation, but you notice you're getting pretty close to the $250,000 breakpoint level. You're also going to be investing $10,000 per month for the next 6 months. It's too bad you couldn't go ahead and get the discount. Well, lucky for you, the manager is here. He's going to let you write what's known as a letter of intent, or an LOI for short. That basically says, I don't have enough to get the breakpoint today, but I will in the near future. He has 13 calendars behind him. That's a full year and 1 month. That's because an LOI is good for 13 months. So you have 13 months to invest enough to get over that breakpoint level. But then you say, well, what about the purchases I've been making? I've been buying every month and didn't realize I was getting so close to a breakpoint. The manager says, okay, go back over and talk to customer service, and they're going to let you backdate your LOI. At customer service, we notice that there's 3 calendars on the wall. That's to help you remember that LOIs can be backdated 90 days. So any previous purchase over the last 90 days can get adjusted to the correct breakpoint. Now, while you're at customer service, you also notice that there's a sign. It says free exchanges. That's because mutual funds typically let you exchange between funds without having to pay another load. So if you're in the growth fund and want to transfer it to the value fund, you can exchange into the value fund without paying a new upfront load. Notice there is a note that says taxes apply, because while you avoid the fee up front, the IRS still sees it as a taxable event. So when you pay your taxes, it's going to be like a sell and a buy if it's done in a taxable account. Then we see these steps with the warning sign. Notice how the steps almost get up to the second shelf, but are just a little bit short. This is to help you remember breakpoint sales. It's a big no-no in the industry. A breakpoint sale is when a representative gets a customer to buy just below the next breakpoint level. So let's say this is a load table for a fund. If the customer invests $99,000, the representative is going to get 4% or $39.60. If the customer invests a full $100,000, the representative would get 3%, or $3,000. So by getting the customer to invest $1,000 less, the rep gets an extra $960. And that concludes front-load discounts. Leave any questions you have in the comments below, or we can continue with the next video here.